and this is second part of an episode of describing different chart patterns and also explaining where we are right now in terms of economic background. So let's begin. Right now let's talk about major countries' indexes. Nikkei 2025 right now is correcting after this rally been started on November 2020 and there was a double top. Right now we are balancing around the area that we have rebounded from in March after this war between Russia and Ukraine on that commenced on March. So right now on a RSI chart we can find that there's a relative strength and we should cross this trend line any moment soon. Right now let's have a look at Germany D40. Now D40 is looking like on RSI chart we should really get through this bearish sentiment right during this MACD been also looking negative. We are finally, after this very long period of time of over half a year, we are trying to turn positive. So there is a high chance we should break through this 14,400 area and get back to those resistances at 15,000. And right now let's have a look at China A50 index that covers just 50 stocks of China, but it's also kind of an indicator of what Chinese economy sentiment is. So right now we can find that we are struggling with getting through those 14,000 points, and without this there won't be any chance to see a bull market in the coming second half of 2022. So right now we have crossed from an upside this trend line that has been set at the end of 2018, and I would find the chance still to get through this, but without anything good from economic data standpoint, we should still consolidate around this 12,000 and 13,000 area. In terms of UK 100 FTSE index, we can find that we have leveled the ceiling been set on January of 2020 and right now balancing around this. We can find that we are forming something that looks like reverted head and shoulders pattern that is very strong technical pattern that should lead us right above those hikes, the historical hikes from May 2018. So right now we can observe that we are still struggling with this area of 7,600s, but there is still kind of possibility of getting through this level. In terms of France 40, we can find that we need much more time and much more strength in order to get us back to the levels that been seen when this boom cycle on economy was going on. So right now, in terms of France, we need some more power regarding Germany index that should finally been observed right around those areas. And the most important areas to tackle right now is 600, 500s and as of next 6,800 100. In terms of Australia 200, we are consolidating on a historical tops area. We can find that we have lowered the level that has recently been set on those peaks areas. Right now we have lowered this back to around 7,000, low 7,000 area in price. So there is still a chance to level these peaks from April and back from December and August once again. So 7,660 is still on the way. And finally, iShares MSCI World Index Fund that right now is pointing that we are still at the levels that have been seen right after this pandemic has broken out. So we are defending levels of 109, 110, and right now getting back to the resistance that should be seen at 120. Right afterwards, with a positive getting positive divergence on RSI, we should find new levels that should be seen right above 120. Right now we are getting to some major ETFs. Select Sector Fund SPDR Energy Select Sector is looking like we are just heading towards 90 points. That is kind of a very important resistance that has been tested thrice, and right afterwards there is a strict path to all-time highs being set on 2014 on 100 points level. So it's a very important psychological area where we should get a sailing, maybe once again with this energy crisis going on. In terms of materials, Select Sector SPDR, we are right now consolidating on this top box of price. We can find that materials Select Sector is still showing a strength. We are balancing and bouncing once again from this low 80ish area, and there is still a quite of a clear path back to 90ish, low 90ish area once again. Right now let's have a look at SPDR Select Sector Fund Financial, and this one has dropped during this interest rate hike period. We could find that we have priced in lots of acts that has forecasted financial sector in terms of how the money will be grabbed off the table when this liquidity crisis will come up. And right afterwards we have a rebounds right around from areas of 32, and we are trying to being hit with a ceiling being found at 35 points. Right now let's have a look at industrial, and this one exactly similar to financials, getting rebound from recent support. We set at 90ish, low 90ish, and we are heading back towards around hundreds area, or rather firstly 98 level. Right now let's have a look at consumer staples, and consumer staples is showing a quite of a sell-off, but also rebounding firmly. So we should observe that this one should move even further with this economy state where we are right now going on with this inflationary pressure. Consumer staples should stay as we are right now, but if this inflation turn out to be peaking, we should also find consumer staples to maybe slide a bit. In terms of utilities, there is also a very strong chart. We are right now heading back towards the highs set on 77 area, and with this one I would rather find the utilities to still stay on those levels. By now this chart was historically very firm, and also we don't find any chance to make a stop on this chart in any time soon. And finally, let's have a look at healthcare. Right now we are observing kinda extending and widening triangle that we may find that could lead to even 150-ish area in the upcoming future. Otherwise, if this select sector fund will get through and break through 125 to the downside, we should observe a quite of a more extended sell-off. In terms of consumer discretionary, we are trying to defend the levels that have been seen right before this pandemic breakout. So 136 is getting 140 rather is getting one of the support, and a possible path towards 165 is still opened. Right now, let's have a look at kind of indicators of a sentiment on the market. Right now, there is a chart of US 30 yields minus US 2 yields, and this one is showing that after this major slump that could indicate a crisis, we are bouncing off firmly, but there is still kind of a threat that this may lead to a possible financial crisis down the road. Right now there are not so serious threats to this, but we should really observe what's going on with economic data. Anytime when we have crossed the level of around 0.2% in the past, that literally has forecasted a crisis down ahead, and right now the time might be not different. So there is a serious threat for the global economy as a whole, and we should really stay cautious. In terms of VIX chart, we are right now balancing around 30 area. That is really pointing that we might be heading back towards quite of an anxious time, but right now we can find that this RSI chart is calming down and should bring us more peace on the market in coming weeks. Right now, IEA to HYG, that is also kind of a possible foretell of a recession. Usually 150-ish area should lead to a kind of a turbulence, economic turbulence down ahead, but right now we can observe that this level has been defended, and we are right now getting back towards those 150-ish, low 50-ish area. In terms of MFI, percent of stocks above 50-day average, we can right now getting off this bearish area and heading back towards neutral. So that's a possibility of getting a very good entrance on stock right now, if we just find a clear position to this. As of next, put to call ratio equity on CBOE. Right now we can find that we are in a quite of a neutral position, but recently there was more bearish sentiment that should lead us to think that if that's correction that is been seen on a major indexes, there might be a great chance to catch the possible dip on the market. In terms of another metrics, that is Invesco S&P 500 equal weight ETF, we can find that we are on a still high levels. That means that we are right now in an environment where the broad market is still unscared by this economic background. So the whole spectrum of stocks is showing the positivity and still are far away from those levels of March of 2020. As of next, let's have a look at VUG to VTV. That shows us a ratio of growth stocks to value stocks, and right now we can find that value stocks are taking a lead in terms of performance. We can observe a sell-off of growth stocks since it really started in January of 2022, and by now we can observe a real carnage of the tendency. In terms of a ratio of medium market capitalization stocks to low cap stocks, we can find that the tendency right now is getting back towards this risk plus environment, and we are still firmly defending the area of 0.88, and there is still a chance to get back towards 0.9 and even up to 0.92 area in coming months. In terms of a ratio of large cap stocks to low cap stocks, we are right now in a heading towards a more risk plus environment. We are defending strictly this 0.82 area, but right now the tendency is lowering, so we should stay cautious in terms of investments. So in terms of another spectrum, that is a ratio of medium cap stocks to low cap stocks, right now we are trying to get past this March top, and there is still have a chance in the coming months, and we should even level up these tops that been set on September or October. And as of the one of the last charts, M1 money stock right now is peaking, so it means the liquidity might be grabbed off the table. Liquidity that has really created this boom cycle on the market, and the M2 money stock we can find that also is right now reverting its pace. Alright, and we are already through this introductory episodes that has really led us through different aspects of trading markets around the globe that will really cast a shadow on where we are right now in the economic background. So it will really ease us the way we should really follow in terms of successful trading. So right now that's it from trading ideas, or rather discussion around the different chart patterns. From now on, I'll be broadcasting updates around where we are right now in terms of different news indicators, and also trade ideas as well. So there will be more general episodes. So if you enjoy and if you find those episodes informative, just hit the subscribe button. Thank you very much for watching and see you next time.